We are going to now talk about gold and how gold is going to trade depending on what the Fed may or may not do in the future. We're going to kick it over to London. Rhiannon Hoyle is going to give us the latest. Rhiannon, what's up with gold right now?
To tell you the truth, I don't think anyone really knows. For the past month, gold has been bubbling around, bouncing around between $1,600 and $1,700 an ounce, sort of watching what the Federal Reserve has been doing and listening to every hint Bernanke's been giving about the outlook. But really right now, traders are throwing their arms up in the air, not quite sure what to do.
You know, it's really interesting because I think the trades appears to be pretty clear among, all the other asset classes except gold. When you think about stocks, a lot of traders say that stocks are going to go higher if the Fed implements QE3. The QE3 will be bad for the dollar. But gold is this one big question mark. It's a big wild card right now. And as you said in your story, gold hovering between 1,600 and 1,700. Are there any other catalysts that could really drive it one way or the other here besides the Fed?
It's true. While there's certainty in a lot of other asset classes, I mean, for gold, it lives in this sort of world of its own where sometimes it trades alongside other assets and sometimes it trades completely against them, and that's what makes it such a big unknown in the gold market. There are a lot of other drivers, though, out there that can influence. On the negative side, there are increased taxes in India at the moment, which is the largest consumer of gold in the world, which is putting some pressure downward on prices. But then there are a lot of other positives as well. As you say, there's uncertainty about the global outlook. There's worries over China's slowdown, and those are positive things for the gold price.
As Steve was alluding to, gold might be unique. However, all markets have been sort of whipsawed by what the Fed has said or hasn't said lately. And in some ways, you couldn't expect gold to go too much higher if it's being driven by what the Fed might do, because interest rates can't go any lower. Monetary policy can't get that much easier. Now, there could be a QE3, but that's been far from likely. So, in general, what's the viewpoint out there on how high gold could go or how low gold could go? What's the range of expectations, Rhiannon?
That is exactly very true. But the thing was, I mean, gold in September last year, it hit 1925 early in September, when people were thinking about QE3 and keeping interest rates really low in the US until, say, 2014. And people say it could get back up there again. If we start feeling that QE3 is still on the table, interest rates are going to remain low, and that the recovery in the US isn't sustainable, then they say that new records are definitely possible. But at the moment, it may take a little bit more to get it there.
And how is gold performing today? Are we seeing any big moves one way or the other? No, to be honest, at the moment, it's quite flat, really. It's been sort of fluctuating between small gains and small losses all day. There's been a lot of other factors playing in. Yesterday, we had the announcement of some central bank gold selling, which has been weighing on the mood of investors a bit today. And there's a bit of just uncertainty. We're heading into the month end, so people are sort of squaring up their books, trying to figure out where they want to be positioned heading into the new month and the new quarter.
Rhiannon, you just touched on an interesting theme, which is that of central bank buying or selling of gold. They had been net buyers for a long time, and that, I imagine, was one of the factors that helped support the market. Do we know what led to the selling that started to happen over, I guess, the past quarter or so?
It was mainly in February. We saw quite a bit of selling, and bullion traders and those who deal with central banks are blaming it on a little bit of rebalancing by central banks in their portfolios. The gold prices had risen in February, so they were maybe just offloading some gold at higher prices. But there's no doubt amongst most of the gold community that central banks will remain net buyers. They say it's literally a blip in the market. They've been net buyers since early 2009, and they say it's a trend that's definitely going to continue.
All right, great. Thanks so much for the report. Really appreciate it.
Thank you.